So basically, it's a cyclical turnaround that you also focus on. And we started this conversation with you telling us that your framework is very apt for long-term investors. And I believe you are very true to your label, because your portfolio turnover ratio at approximately 27 is literally half the industry average. So when do you sell? What are the exceptions to your selling rules? I would love to hear some examples here.
So generally, we have a value principle or a value assessment of our businesses, that the companies, when we are buying over the next 3, 4, 5 years, as these businesses grow, these companies should attain a specific value number, looking at the prospects of growth and what the companies would sort of eventually deliver. Now, when we see that many a times in the cycle, it is possible that sentiments runs very high in some of these. As you mentioned, most stocks are in momentum. Not most, few stocks or many stocks are in momentum at certain point in time, and then there is a massive re-rating, which really makes the valuation look very expensive, and it really is more than capturing the intrinsic value which we believe the company should have delivered over the 3 or 4 years period. So whenever we have seen upfronting of these returns happening, we generally try and book profit out of those. As an example, we used to own Dixon. We felt that at certain point the valuations were looking quite premium, and then we sold off, and then once again now it is sort of come off, and then we again sort of took exposure, because we felt the business anyways is strong. So one is the valuation itself, when there are excesses which gets created. The other is when we see that the core thesis is breaking down. So let's say the company with a very strong pricing power, and there is excess competition which is going to sort of break the pricing power of a company and create a permanent sort of impact in terms of the outlook for the business. I think that's where we these are times where we have to dwell a lot more and try to understand the reasons, and then take a very calculated call, because it is possible that things can change and they may again regain their strength. But by and large, we look at the disruptive competition as a key threat, and then that we use as a reason to sell. And again, the last I would say is the adverse regulatory changes which impacts the businesses. Those we try and analyze the impact of those, and we feel that wherever regulatory changes takes place which are detrimental to the businesses with a long-term view, then there is those are the also reasons where we take a decision to sell the businesses.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.